Welcome to The Explainer. Today we're taking a really deep, calm dive into the actual mechanics of risk management and capital preservation. We're looking at the GoldMining Loonie, USDCAD's steady series for week 27. Now, our focus here today? It isn't on massive gains or aggressive market moves. Instead, we're taking a documentary-style look at what actually happens when a trading system is designed to prioritize safety above absolutely everything else. All right, let's jump right in.
0. You know, it's a number we almost always associate with nothingness, or maybe even failure. But in the frantic, super fast-paced world of algorithmic trading, 0 can actually be the ultimate victory. It literally represents a boundary held, a major risk avoided, and a highly calculated decision to just step back from the brink.
And that brings us to this idea. Sometimes, the most profitable position is no position at all. This brilliantly illustrates our core thesis for today. When the storm clouds start gathering over the financial markets, the true test of a trading system isn't really how well it fights the storm. It's whether it has the intelligence to simply drop anchor and wait it out. Today, we are really exploring the immense power of disciplined inactivity. Take a look right at the center of the official Week 27 dashboard. You see it right there. No trades this week and a 0.00% weekly gain. For episode 09 of this series, our central story just isn't about trading activity. It's all about the algorithmic choice to sit on the sidelines. The system didn't break down, you guys. It simply evaluated the landscape and decided, nope, the risk-to-reward ratio just isn't there right now.
Let's move into Section 1, Navigating Market Volatility.
So what exactly was happening out there in the broader landscape that caused the system to just stand on the sidelines? Well, during the reporting period ending July 4, 2026, the USCAD currency pair was subjected to a wildly unpredictable and chaotic mix of external factors. First off, we had reduced liquidity thanks to the Canada Day holiday. Then, we saw some serious oil price volatility, which, as we know, heavily impacts the Canadian dollar. Over on the US side, there were constantly shifting expectations surrounding the Federal Reserve's next moves, and all of this was culminating in the heavy anticipation of the US Non-Farm Payrolls report. Basically, it was a perfect storm for totally erratic market behavior.
And on the ground, that storm looks exactly like this 15-minute USDCAD chart. Just look at that erratic, choppy price action, finally closing out at 1.42006. It's noisy, it's incredibly unpredictable, and when you contrast these volatile market conditions with the primary goal of the steady series, which is protecting your capital, the EA's decision to stay completely out of this mess makes total, absolute sense.
Moving on to Section 2, 0 trades, 0 drawdown.
Shifting away from all that macro market noise, let's look at the very specific micro results for the week. The official one-week MetaTrader 5 summary confirms a 0% gain and exactly 0% trading activity for the week. The balance holds perfectly steady at $2,147.28. The absolutely crucial point here is that 0 trades were forced during the storm. The algorithm just held its ground, preserving every single cent of that balance. I mean, this entirely empty summary ring perfectly captures the aesthetic of safety here. 0.00 gross profit and 0.00 gross loss. When the markets are this unpredictable, taking literally 0 risk is a highly calculated and, I'd say, successful maneuver. There is no damage to repair here whatsoever.
And the ultimate result of that safety? A perfect, beautiful 0% flat line on the weekly drawdown chart. It's such a stark contrast when you consider all that crazy volatility we just looked at on the price charts. This flat line proves that the EA's programming functions exactly as intended to avoid bad setups. It didn't get caught in a dangerous sequence, it simply rested.
Which leads us to a massive educational takeaway for this explainer. Disciplined inactivity. It is the systematic and intentional choice to avoid entering the market when conditions fail to meet strict algorithmic risk parameters. I really want you to take this away today. In algorithmic trading, restraint is absolutely a feature, it's not a bug.
All right, Section 3, the long-term reality. Now, to truly understand this system, we have to radically own the past. This week's perfectly defensive 0% flatline posture sits in pretty stark contrast with the realities of previous drawdowns. To build trust, we've got to look at the whole picture, not just the weeks where the sea was perfectly calm.
The all-time MT5 report provides total, unwavering transparency regarding the account's actual history. We're looking at a negative 12.97% lifetime growth, accompanied by a 35.73% maximum drawdown. We are looking at real risk and real historical exposure here. This isn't some simulated fairy tale, it is a real account navigating very real market pressures over time.
Looking right at the lifetime growth and drawdown curve, you can clearly see a sharp, steep drop, a negative 34.78% monthly decline specifically back in June 2026. It's vital to acknowledge that this specific, really significant drop continues to heavily influence the overall long-term equity curve we are looking at today. The system is currently deep in a phase of recovery from that specific event.
Breaking down the lifetime profit circle gives us even more clarity. We see a gross loss of negative $1,959.75 balanced against a gross profit of positive $1,870.06. That leaves us with a total net loss of negative $316.56. Now, this explainer is completely committed to showing you real progression and realistic recovery. The path upward isn't always a straight, beautiful green line, and understanding this exact balance of gross profit and loss is key to grasping long-term trading realities.
Finally, Section 4, the road to 10,000.
So with the reality of the past firmly in view, let's bring the narrative back to the overarching mission and exactly where the account stands right now as it moves forward. Returning to our dashboard, let's look down at the bottom metrics. The current balance sits at $2,147.28. This keeps us totally anchored to the long-term journey, which we call the road to 10,000 cents, or $100. Right now, that progress bar shows we are 2.15% completed. It's a steady, very methodical climb. It requires immense patience, fully relying on risk management to slowly chip away at the distance remaining.
Which brings me to a final, pretty provocative thought to leave you with today. We've seen how this algorithm protects capital by simply doing absolutely nothing. But what about you? Does your trading psychology actually allow you to sit on your hands when the market demands it? Long-term consistency depends just as much on knowing when to stay out as it does on knowing when to enter. I definitely encourage you to keep following this transparent, ongoing journey toward 10,000 cents. Thank you so much for joining me for this explainer, and remember, sometimes absolute patience truly is the ultimate strategy.